Hey guys, welcome back to the channel. Today I'm going to be covering Zilliqa and going over some very key levels to watch out for and my thoughts on the price action. So if you are new to the channel and you want to show some support, please leave a like and subscribe. So I have these two moving averages here. The green one is the 21-day exponential moving average and the red one is the 20-day simple moving average. So together they form this band, and generally you can see price action interacting with these levels, and when we're bearish typically we see some pretty key rejections. So I'm going to circle the prior rejections just to illustrate how consistent this is, because every few weeks we have another rejection off of this band here, and there's just so many rejections that has led price to lower lows, and it's a declining resistance area. So you can see how right now today we are testing it once again, and there is the potential that we repeat these rejections and we drop from here. However, if we do see price action start to make its way back above this and start closing above this band and holding it as support, then that would be a great sign, and I would say that most likely we are probably having a intermediate term low in place, and we might start targeting some of these lower highs, such as these circles areas, which correspond to roughly 6 cents. But if we continue to reject and we have a situation similar to these prior rejections, I would say that most likely this region here that I've outlined is going to be holding as support. So this ranges from approximately 2.5 all the way up to 2.9 cents. And if I zoom out all the way just back to 2018, we can see how historically this has been a very significant level. So we can see how this was support in March of 2018. So I'm just going to highlight that. And really we just have this massive area that's been support and resistance for the past few years on Zilliqa. So we have basically support being held twice here. We had some consolidation holding this level in October and November of 2018, and then we broke below it and we flipped it from support into resistance. So you can see there's some pretty key rejections here. I'm going to highlight these as well, except in red, so you can see the difference here. So we have basically three key rejections off of this level here, and then that kind of caused this new low to be formed, some consolidation, and then later on we tested it a few more times, and it wasn't until the sixth retest that we were able to break above it. So you can see how it was super strong resistance with 5 key rejections off of this level over a few years. And then eventually when we did break above it, that was kind of the sign that we were ready to continue this uptrend, and we started to trend back up to these all-time highs. So currently we have bounced off of this in the short term. So I would expect most likely if we are getting rejected off of those moving averages and coming back down, most likely this area would hold as support. And I think that we really don't want to see this level to be lost, because in the event that this loses as support, there is the potential that we flip it back into resistance similar to that of 2018. And if we do that, then there is the possibility we could hold strong resistance for several years. I don't think this is a likely scenario, but it is a scenario you should consider, and you should watch out in case we do lose this level at roughly 2.5 to 2.9 cents, because historically it has been a very strong level. It's kind of the inflection point between a bull market and a bear market, and really if we start to break below this, then I would expect most likely the highs would not be retested for a few years. So that's the end of my Zilliqa analysis. I hope you guys did enjoy. If you have any comments, feedback, or video suggestions, please leave those. I really do appreciate those. And as always, I will see you in the next one.